All right, guys, let's go live here. And we are going to go over all the different charts today. We're going to go over SPY. We're going to go over IWM and over Qs. I'm just making sure that I'm actually live. I am live. Okay. So a little bit of a rough start there. I haven't done this in a couple of months, so a little bit rusty. But nonetheless, I'm excited to go over all this stuff with you guys. S&P 500, the Qs, Russell 2000, they're all ripping higher. Now, Russell 2000's lagging the NASDAQ and the S&P 500, mainly because they don't have an exposure to the big tech stocks. That's going to be your Meta, your Amazon, your Apple, your Netflix, your NVIDIA, Google, Microsoft, Tesla, about 8 of them in all. You can even throw in AMD right now. But overall, Russell 2000 has struggled. It's not been able to keep up with the overall rallying nature of SPY and the Qs. The Qs, you're talking about massive amounts of exposure from the big tech stocks. SPY still massive, but to a lesser extent because you're talking about 500 stocks rather than the NASDAQ, which is about 100. So in the days ahead, we're starting to see the potential for a pullback. But that doesn't necessarily mean the entire market is going to pull back, meaning there may be some sectors that are able to rally with despite the fact that the big tech and the discretionary and the communication sector starts to pull back. So what I want to do in this video and in this live stream is to essentially try to identify the sectors that we should be watching in the days ahead, which ones are setting up for some nice upside potential. And so that's one of the things we're also going to do. I'm going to do the technical analysis on the SPY, the Qs, IWM, go over the VIX, some other indicators as well, go through each of the sectors, and then provide some decent trade setups and go over your chart. So if you guys have anything that you guys want me to look at, any stocks that you want me to look at, post them here in the live stream. I see them coming in real time, and I'll go ahead and cover your trades as well. So first off, let's go ahead and just go straight to the charts here. Right here, you can see SPY. This is what I work off of each and every day. SPY extremely overextended. I mean, we've gone since the middle of March from 379 all the way up to at one point over 442. Now we've pulled back a little bit to 437, a 0.5% pullback. I wouldn't call that extreme by any means. The first place that I would be watching for in the days ahead would be this key support level at 431. Can that level, if tested, hold? If it does, that provides a decent bounce opportunity. That goes back to the August highs. But I think where the real support level that you could see it actually pull back to would be this blue line. This is the rising trend line off of the March lows. If it can pull back to that level, that would be around the 425, 426 area. That also provides a decent balance opportunity. And of course, you have others. You have this breakout level that goes back to February, January time period. I don't know if that's going to be as strong of a level to watch going forward. And then, of course, you have the trend line off of the October lows. That's also a very important. But if we pull back to that level, there's definitely bigger issues in play for this market. There's going to be more of a talk at that point in time of we're entering into a recession. The market might be going back to test the March or to the October lows. That would be the kind of talk that you would be hearing on Wall Street. So overall, I do think that when you're looking at SPY, you got to, even though it's pulled back for 2 straight days, it still has an overbought reading of 81. If you look at it on the weekly chart, it gets even crazier. It's at 90. And then if you look at it from a monthly chart, it's all the way up to 86. So overbought on every time frame, daily, weekly, monthly. Going back to the daily, I didn't need to go through all those charts to do that, but you can see volume fell off a little bit today. We had seen increasing volume over the last week or so. That fell off today. Of course, we are coming off a holiday week. That tends to see a lighter loads of volume for those who are taking off the entire week because the market was closed on Monday. Then we have the Qs. This is what we want to be looking at here on the Qs. Extremely overextended. We talk about SPY being overextended. The Qs even more so. We're talking about today, yes, it was only down 0.25%, but 76 of the 100 stocks on the Qs were down. That's more than 3-to-1 negative breadth in the Qs, despite only being down 0.25%. But what's even more interesting is the fact that 6 out of the 8 big tech names that I just went over earlier, they were in positive territory led by Tesla, which was like 5% higher on the day. So what am I looking for here on the Qs? Rising trend line going back to January. That's going to be one of the things that I'm watching there. Do we get a significant pullback here? Because it's become quite a bit disconnected from this rising trend line. But it also, and you may have to, look through some of these lines a little bit. You have this yellow line right here going through off of the March lows. It's also become disconnected off of it as well. So one of the things that you're seeing with the big tech names is that a lot of these existing trend lines that go back to March, whether it's Meta, whether it's Microsoft, or any of them, Netflix, they all are disconnected from those rising trend lines. And why is that important? Because when there's been multiple tests in the past, there's a good chance you're going to see another retest in the future of that rising trend line. And we saw it. You can even go back to, for instance, when we look at Tesla, for instance, over time. Tesla had an amazing trend line here. And when you look at it, yeah, it got really disconnected here. At this point in time, it got extremely disconnected from that rising trend line. But what did it do? It came back and it tested it, held it at 178, and then went on another big disconnect. And then it came back and tested it, tried to hold it, and it just got really sloppy, really ugly at that point in time. But nonetheless, I would expect from the Qs at some point in time for it to either come back and test this yellow rising trend line or this blue rising trend line, and if not both of them. So short term, if this bullishness is to stay, I would look for support to kick in around that 355 area. I wouldn't look for it to get much lower than that. You also have Jerome Powell talking this week. That creates some additional volatility, especially if he's trying to get the market's attention with his words, a la a Jackson Hole kind of moment. IWM, like I said before, this is the one that's been lagging the other indices quite a bit. It actually had a lot of potential, and it's somewhat disappointing. I actually just exited my IWM trade today. I got stopped out. I think it was like overall for like a 3% gain. I played this breakout level here. I took one portion for like a 4%, another portion for like 3%. I think today's was like 2.3%. So you average it out, it's probably somewhere in the threes. But took out the lows here from what day was that? That was June 12th. So it took out those lows, stopped me out. And it's still kind of in this sideways consolidation, but it's getting sloppy. It's getting messy. It's getting somewhat consolidated, but it wouldn't be so in the most ideal way of wanting to play it. It almost looks like it could break to the downside, if I'm being honest with myself. So for IWM, what I would be looking for is a retest of this breakout level. Does it pull back to 179 and hold? If it does, then that becomes a good bounce opportunity. Why am I not saying, hey, we should be buying stocks right now because they're trading at they just keep going up every day? Like, for instance, we go back to Tesla. If I type it in right, why not just jump into that Tesla? It's at 5.3%. Yes, it may keep going up higher. It may go up to 300. But you have to ask yourself, and this is where being a principled trader, being a person who stays very disciplined, it can be hard in these environments because you're looking at Tesla and you're saying, it's already up to 300 or 274. It's probably going to 300. Why not just buy it now? It went up 5% today. Let's say it doesn't go up 6-7% tomorrow. Very well could. But how do you manage the risk? Where do you find the edge for trading? Because there's stocks like this every day out there that you can trade. And there's people who trade them every day. But I would say the majority of them are blowing through their capital because they're not trading with an edge. And so when you're looking at these big name stocks like Tesla that everybody knows about, and it's trading like crazy to the upside, and it goes on 13-day winning streaks, yeah, a lot of people are going to jump into them, but a very few will actually be profitable in them because as they're getting in, a lot of your big whales, a lot of your Wall Street names, they're probably unloading a lot of their shares to the less suspecting. So got Alex in here. We got Kevin, and yeah, good to see you guys in here. I'm going to get to that Starbucks chart in just a little bit. We got Kevin from Lakeland, man. Always good to have you there. All right, so talked about the indices. Let's look at the VIX here. The VIX is important too. It's getting very suppressed. And one of the things that you're seeing here that you haven't seen in quite a while is we're staying at these very suppressed levels without any real meaningful bounce. I mean, even in May, when we got down into like the 15th, we saw at least a pop up into the 20s, but now we're at the 13s and we can't even get out of the 14s. So that's leaves me a little bit curious. Like, how low is the VIX going to go? We're below, pre-pandemic levels. It's extraordinarily light. I mean, there's the potential that we get down to the 11s or 12s before this market finally starts to pull back. But right now, I definitely wouldn't be shorting the VIX. And honestly, anytime you start playing that game where you're shorting the VIX, I have seen a lot of times throughout the course of time where people blow up accounts trying to trade the VIX. It's a very, very dangerous game that I would not necessarily find myself getting involved in. And we got Michael Sanders and we got Kevin from the Trading Block. Good to see all of them in here. All All right, so T2108, also another indicator that I like to watch closely. It's been chopping around sideways. 59% of stocks are trading above their 40-day moving average. That would seem like that's a real good positive. But then you look at what the highs were from February, which is nowhere, way below where we're at right now. And you look at the highs from last August, we were getting into the 79, 80% range. Right now we're at 59. That is a huge bearish divergence. Definitely something that we should be concerned about. Now, I'm not even short on this market right now. I'm actually long. I got a little bit less long today, but overall, I am, while I might be, slightly bullish on this market, or at least trying to ride that bullish wave, I'm not necessarily sliding all my chips into the middle and like, oh, this is it, man. We're going right back to all-time highs. I'm very, very skeptical of this market. T2107, which measures the percentage of stocks trading above their 200-day moving average, less than 50%. That's also another bearish divergence, because look where we're at in February. We were hitting 67%. So definitely something we should be taking note of here. All right. So when I talk about the top-down trading strategy and where should we be looking at, what sector should we be involved in, a lot of people want to automatically go back to, let's go into tech. And that's kind of like the knee-jerk reaction. That's kind of like the default here. But you can see tech is extremely, extremely overbought. Why? Again, it goes back to the Meta, Apple, Amazon, Google. I'm not going to go through all of them, but you get the stocks that are driving that. That is the reason why you have XLK so overextended. You had this rising parallel channels that just blew right through it. That's kind of a rare thing to do, to blow right through the upper end of a rising channel, and not only just blow right through it, but to really not ever look back and just keep going straight up. So we were talking about disconnections from rising trend lines. Yeah, there's a potential for a pullback to the 138 level. I mean, it would be severe and it would be extreme, and there'd be a lot of good opportunities. But this is getting, kind of out there in la la land at this point. So let's look through some of these different sectors here. You have discretionary. Is that really a sector that I feel like I could trade right now? Not really. I mean, it's overextended, extremely overbought. We're talking about stochastics readings of 95. You're looking at it on the weekly, 94. What does it look like on the monthly? We're a little bit less on the monthly, but 60 on the monthly. So it's not overbought on the monthly, but weekly and the daily, crud. There we go. The weekly and on the daily, very much so overbought. So that's probably not something I'm going to chase after. And then you look at healthcare. Is there really an edge trading in healthcare right now? No, I mean, it's essentially been sideways since May. It hasn't done anything. You can go through communications. This is kind of overbought. We did have a bullish wedge here that was forming for a little while there, but then it got kind of hokey. It blew through it to the upside, and then it head faked and came back down. Now it's testing it. Not really sure what to expect out of communications going forward. Its big leader is Google, and that one's an absolute mess right now as well. It's just trading sideways, not providing any clear edge, and a lot of fake breakouts, as you can see. You had one back on 6/7, you had one on Friday, and you had one in the middle of May. So not really a place that I would want to be wanting to commit capital. Then let's go to industrials here. XLI. There's some potential here with industrials. You can see I have this support level that goes all the way back to April of last year. It's pulled back, significant pullback today, 1.1%. There could definitely be a bounce opportunity right here with XLI. This is your industrials. You're seeing some pullback in Caterpillar as well. So then we should ask ourselves, well, what kind of stocks might be available with the industrial sector? So let's look at some of the stocks in the industrial sector here. Let's pull it up by capitalization here, right? I always like to start, and I don't know if it's just me or anybody else, but I always like to start with the biggest names and work my way down from there. But going from there, we got UPS. I don't see an edge there, okay? And I'm going to go through these pretty quickly. I don't expect everybody else to go through them as quick, but you can see there's really not much there until you get to Honeywell. And Honeywell actually has somewhat of a cup and handle pattern here. This is the cup. This is the handle. So you got a big, like rounded bottom. And then you have a much shallower bottom. That's your cup. So the cup, handle, and then you have the pullback to that handle. Those are pretty good opportunities there. I'm not saying that it's going to hold that support level, but it's definitely one to watch in the days ahead. So if you can get a bounce off of it tomorrow, and it starts to move a little bit higher up to like 201 or even 202, then it's, to me at least, I would be willing to put a stop loss below the lows from 6.9 and put my stop loss there. If it can bounce a little bit more, maybe then I start raising my stop loss to below today's lows. But that's one that you can start to target. Okay, we see that industrials has pulled back to a key support level. Which industrial names are showing potentials for a bounce higher? Honeywell would be one of them. Another one you could take a look at is ADP. It needs to get above this breakout level here, but that has some good potential right there. You're talking about 222-ish. I would probably even say it's not there yet. It had tried to break out on Friday. You can see it gapped above the breakout level, and then it faded the rest of the day. So for me, I would say to myself, if it breaks above Friday's highs, that would be 224.75 or 222.74. 222.75 would be what triggers it. Then I would try to get long. So that would be a good opportunity there, with a stop loss below today's lows. And then finally, FCX. You have a declining trend line there, hasn't broken through it yet, but let's see whether or not it can break above that 40.60 mark, and that could be pretty good. Again, you want that to be in conjunction with a bounce off of XLI. If that sounds like too much, then maybe just narrow it down some and say, hey, I'll look at it from an ETF standpoint and play the ETF. So that's one way you can go about looking for some of these trades. You also have like XLRE. It's showing some good potential as well. You have a double bottom here, first bottom, second bottom, and you don't have quite the breakout. Try to break out on Friday, but you want to wait for this breakout in XLRE to really get long on any real estate names. If you're looking for some real estate names, SPG would be one of them. Not quite there yet, but definitely one worth watching as it continues to consolidate and double bottom beneath resistance. Let's see here. WY. That could also be another good double bottom right there. And yes, I actually have some of them written down because I didn't want to waste too much of y'all's times going through some of these. But you can see there's definitely some good opportunities there, but you need real estate to come around as well. Finally, the last sector that I would say that has some potential to it is materials. We talked about the double bottom real estate. XLB also has a double bottom. First bottom, second bottom. Pulled back today 1.8%, but if it can rally back and get back above this 82 mark, there is some strong potential there. Some of the names that I would watch there, we talked about FCX. I think I actually included FCX on the real estate, so I don't have to go back there again. But APD is one that I would definitely be keeping a close eye on. You can see here there's a nice basing pattern, double bottom. Watch to see if it can't get above that 300 level. And then finally, Ball. Ball is another one, huge basing pattern. This goes all the way back to August. I would be looking to see whether or not it can get back above the 61 mark. Again, it's going to need materials to play nice and get back above that 82 mark as well. But again, when you start to look at technology, is there really an edge there? No. I mean, you can buy it and hope that it keeps going higher, but we're not trying to trade off of hope. We're trying to trade with an edge. Same thing with discretionary. When I'm looking at that one, you have a whole bunch. I mean, I could go through all the sectors here. And if there's one that you want me to look at, I'm more than happy to do it. You take energy, for instance. Rising trend line looks promising, but what do you see lacking on this rising trend line? What is trend lines typically have in them? Higher highs and higher lows. Now, right now, it's testing this rising trend line quite a bit, and it's even on the verge of kind of breaking through that right now. But it doesn't have higher highs. It needs to have a higher high, and it doesn't have that. Instead, it has higher lows. It's forming a triangle pattern, and it's not the kind of the one that's on an existing healthy rising trend line. This is like trend line turning into a triangle. So for me, I would be a little bit concerned, a little bit worried that this might be ready to break to the downside in the days ahead. Whew. Okay. We've gone through a lot there. I think I spent about 20 minutes there talking. So going to go look through some of y'all. If you have any questions, feel free to post them. I'll look at your charts. I'll stay here as long as it's needed. Not a lot of charts posted yet, but let's go ahead and look at this first one, Starbucks. So this is one that I've been watching. I think there's a little bit of complexity to the Starbucks chart here right now. Again, one that I love to mark up for a while, and I'll take all the lines off of it for a second here, but for a while, I really thought that this line here connecting the bottom was the beginning of a topping pattern. And it still may be the case. I mean, if you're looking at it from, what have we seen of late? We've seen these new highs put in, but then we've seen these lower highs put in as well. So this might be another lower high. But in the very short term, and this is things where it gets a little bit more interesting, you have essentially like a double bottom play. I mean, I think I've been saying that a lot in this not podcast, live stream, where you have the first bottom, you have the second bottom, but this rising trend line's given it some problems. So this rising trend line off of the May lows from last year, it's tested it on multiple times. It's held it. It got disattached. Look how disattached it got from late October just until recently here in May. Then it broke through it. So that became a problem. Then it found support here at the 97 level, tested it multiple times, formed that double bottom, but now it's finding difficulty of breaking through that old trend line. And that's what at times a lot of times your old trend lines can offer up what they used to be as support. They'll oftentimes, once they're broken, offer up some resistance too. And I think that's what you're seeing a little bit of here right now with SBUX, Starbucks, is that it's facing some resistance and it's not doing a very good job of breaking through. I think it becomes a long play if, and you can see as well, it's pulled back today to this breakout level. So far it's held it. So if it can bounce back above this rising trend line that it once broke, then it becomes an ideal long play. So maybe above 102.51, then I could be bullish on that again. I think there's a story there. There's an opportunity there. It just needs to perform technically. You got in, let's see, 150 on that 1 hour chart, stop loss at 175. Let's see here. Low. Yeah, so you got close to getting stopped out of it, Alex. That's good. Let me push my face up so I'm not getting covered there. Alex got in at 150, so he's got a little bit of profit. He's trying to preserve a little bit of it. This is so far a pretty difficult trade in the sense that it's not pushing through that resistance. So that's what you want to watch. I don't think the stop loss is in a bad place. What is that? Probably, yeah, I would be fine with it. It's not far from being tested. So the only thing I would say about the stop loss being at 175 right now is that tomorrow you could see like a 0.75% sell off or 0.8% sell off in the early going, and then it bounces right back and rallies higher. So just be on the lookout for that possibly happening. We got Mara, M-A-R-A, broke out of consolidation today, close to declining trend line. Man, I see this one popping up a lot. So let's see here. Yep, that's the declining trend line. I have a feeling that you're talking about. Broke out of it. And then, yeah, that's the consolidation here that he's talking about right here. Really heavy consolidation, broke out of that. Not only did it break out of that consolidation, that was big that it broke out of that declining trend line. And I think we're talking about the same declining trend line. Who knows? But let me see if there's any other resistance. Personally, I think it's broken out of it. I don't know if I'm missing one or not, but these kind of moves, you're talking about 17% to the upside. They're very difficult to manage. You could see a 5-6% pullback tomorrow in the early going, and then you see the buyers rush back into it. When the stocks are this volatile and when they had this high of a beta, I mean, you look at what it did from early January, going from $3 all the way up to $9 in a month, less than a month. Very difficult to manage the risk. That's why you don't see me trading a lot of stocks when they're in the $10 range. Obviously, today it made its move outside or above $10, but chasing it at this level, I would be very cautious of, because for one, a stock that's moved up 17% in the one day, where does that stop loss go? You can drill down into the intraday moves, but even then, I mean, it's pretty stretched. I mean, I think the nearest stop loss would be like 979, so that makes it very difficult. But if you're in it before that move happens, it's a really good move. So for me, if I'm in this trade, I'm taking some profits off the table, maybe a third, maybe even a half, because of maybe how overbought this overall market is right now. But good job on Mara there. AMH might be of interest. Yes. So one thing about Kevin, he's in the trade block. Dude provides some really good charts all the time. I always really appreciate it. Sometimes he makes my life a lot easier. But in any case, yeah, this is a good chart here. Really like that ascending triangle. Let's see. For me, I would, yeah, the breakout's going to be above this 35.70 level. I think the stop loss goes below this rising trend line, because for one of the things that stands out to me is how well it's, even from a candle wick standpoint, it is adhering pretty closely to that rising trend line. So for me, the stop loss would be going below that. So probably a couple of days back is where I'd have my support at maybe like 34.27, and just consistently try to raise that stop loss each day. But it's not ready to get long on yet. It needs to break out above 30, what do we say? Probably like 35.70 or so. But really, really good chart here, worth adding to my watch list. Michael Connolly, great presentation as usual, Ryan. Love your reasoning, which gets away from the hype of other commentators. Keep it the good work. Thank you, Michael. Appreciate that. That's what I try to do. I mean, I can't get like hyped up like some of those other people do. I wish I could, but you know, to me, it's just, I guess I take trading a much different way. It's a life for me. So if the Qs have a pullback, where do you see it consolidating? 360. So going back to the Qs. Yeah, I mean, I kind of think that's no man's land right there at 360. I mean, that would be less than a 2% pullback from where it's currently at. To me, I think if it's just going to, you know, have a small pullback of some kind, not that it has to come down to this level, I would be watching around that 355. You can see where we don't even need that little line there anymore. I could see where it'd go around like 355, maybe bounce off of that level. And if that doesn't hold, then I'd start watching this other yellow line here off of the March lows. FDX and DIS. So FDX, I think they just reported on earnings, right? You got smacked on earnings. Yep. All right, let's pull up some post-market charts here. Yeah. So, I mean, you can see over here on the left-hand screen, had a big dip at 4 p.m., came right back up. So from 214 to 227, pretty significant pop there off of the lows. Also interesting to me is where that support's kind of happening at. It's right there off of this declining support level right there. So this was a pretty big bull flag pattern. It broke out, but it couldn't sustain that breakout. It had a, let's see what it did today. I wasn't really watching this one too closely. Yeah, it had a little bit of a pullback today. If it didn't have earnings, that pullback wouldn't bother me too much. But post-market, that is a little bit more eye-opening. It's down 3.7%. Not you know, life-threatening or anything if you're in it from a long standpoint. But I would be watching these lows today. If you don't, you know, remember them, I would definitely keep an eye on how low does it go post-earnings. 214.09 is the mark right now. If it breaks that tomorrow, that would be something that would be concerning for me. You also have this rising trend line. It goes off of the September lows. So I actually have this in my long-term portfolio. But I mean, for me personally, FDX, if it goes all, you know, I don't even remember where I got in at it. I want to say I probably got in like in the 160s or 170s. But if it goes down to 208, that would probably be a reason for me to want to, you know, maybe add more to that long position because I don't even have a full position in it yet. So Sam's in the house. What's up, man? DIS. So coming into this week, interesting. You can see I've marked up this chart pretty bad. But let's go to this. Let's just go with a clean slate here. So coming into this week, I had this on my bullish watch list. I thought to myself, maybe there's a story. I shouldn't say story. But maybe there's an opportunity here if it can try to. I'm trying to hide today's price action here if it'll let me. There we go. I thought maybe there could be like a basing pattern coming into this. Okay, so you had the left shoulder, you have the head, and possible right shoulder forming. Now, fast forward to what we saw today. Yes, that may be still in play, but it looks a lot more problematic at this point. I feel like it needed to at least hold that 90 level. It broke below 90. I could definitely see where this goes back down to 87. It just almost looks like it's in a free fall. You also have a gap down here as well that has not been filled yet. So could it go down to that 89 level? That I definitely think so. It's only like 1% away and fill that gap. I just really don't like the chart that much at this point. I liked it. And this is how fast things can change in trading, especially from whether you're bullish or bearish on things. I liked it yesterday. I liked it coming into today, but I don't like that candle today that it came up with. So that's a little bit of a problem for me. Let's see here. Good to see you, Sam. You got caught up. I got caught in the short. Where do you see markets can consolidate, if at all? So one of the things, I mean, I've shorted the market plenty of times this year. It hasn't really worked out very much. I think one of the best episodes for me was like early March. That worked out pretty good. Outside of that, it hasn't worked that good. I haven't shorted the market in a while. It's a frustrating market to trade. And I think so much of it just, you get that hype, you get that, you know, the .com feeling that's currently prevailing in this market. It's really hard. So I think one of the things that was a tendency for me is that you would see some of these intraday moves that could be really harsh and really strong. And then all of a sudden you're thinking, okay, the market's starting to break down. And technically it was. And then by the end of the day, it was like it never happened. And then you get stuck in these short positions. And that was really bad too. But you definitely want to be using stop losses when you're short in the market, because you just never know how high, if that's what you want to do, how high these markets are going to continue to climb against you. Like right now, I don't know where this market tops out at. It's really a hard call because the euphoria in this market is at extremes. So for me personally, yeah, I'm not going to go try to short it at this point because it's broken through every level of resistance that I had marked. I mean, I felt like this was a layer of resistance that was important, blew right through that. I even thought the August highs I wasn't short at the time, but that was a significant level, blew right through that. So every time we would get one of these little down days, like right here and right here, it starts to look like things are starting to fall apart. And then all of a sudden we just go on an epic tear. It's hard enough to even get one day of selling, really. BMY is also on the verge of trying to break the wedge. That might be your wedge right there. All right, so we got a little wedge action right here. So bearish wedges, they tend to narrow over, or bullish wedges, they tend to narrow over time going lower. That means that the lower lows are not as deep as the lower highs are. So it creates this narrowing effect. It's the hardest thing to explain just with words, but you can see it's narrowing, it's going down, and it's got maybe a little short-term action right there. That's not a bad base right there. So that's good. It also has a higher low that's trying to form in the short term. So there's potential there as well. So if it can get above that 66.58 level, I think there's potential there. So I'm going to add that one to my watch list as well. BMY. Good stuff. Stop loss wise, I think I'd be putting my stop loss. I think initially I'd say 63, below 63.87. But it needs to get above that resistance level. Quick update. Thank you for enjoying the podcast, man. I've been trying to do some more videos, and I want to not just make them about the videos. I also want to keep doing some charts. So that's why I'm trying to get back into the swing of things on these live streams. Alex, SBUX, I tend to let the first 3 minutes play. Okay. Yeah, Starbucks isn't known for being highly volatile. So, you can probably get away with that. It makes me a little bit nervous because you just never know, but definitely something that might keep you from getting erroneously stopped out. And if it does break below that, maybe even put a stop loss below the lows of the day at that point. ABNB. Also on my list, looks like it was facing strong resistance here. Yeah, let's see. Did I have that on my watch list? I guess I did. I must have taken it off. But yeah, I don't have it on my watch list right now. But in any case, though, ABNB, it broke through. I think the reason why I took it off of my watch list is just because of this massive run off of the late May lows. And it went from 104 all the way up to 126. So almost a 20% move, right? Maybe it was a 20% move. I'm trying to do the math in my head, and it's not really computing for me at the moment. But it has some resistance that might be forming here. This goes back to the resistance from 5.9. That might be kicking in a little bit there. Keep an eye on that. You have a little bit of a pullback. Does this pullback take you down to 121? And can it hold that level? That's the breakout level here. I hate it when it goes on these breakout levels. And it's like after it's already run like 10, 15%. And then it's like, I'm not going to buy that just because it's breaking out. I have no way of managing the risk on that trade. For this trade, 113 with a breakout at 122 is a little bit too much for me. So any case, ABNB fell from this area to 104. Yeah, it did. So it's kind of a hard one to count on, because even with this breakout of the channel, if you just look at it without any lines, it still looks kind of sloppy and messy, right? You could say that maybe this wasn't the breakout. Maybe that's why sometimes it's good to get rid of all the lines. Maybe there's a lot of yellow lines here, but maybe this wasn't the breakout level here, these two lines here. Maybe, let's get a fresh chart here. Maybe this is really what we want to be watching for here. Get it. hey, that's really where the breakout level is. So maybe if we can get some consolidation, I'm saying maybe a lot, but if we get some consolidation and then it breaks above the Friday highs, that could be good. That could be something to work with. Yeah, so NFLX up or down from here? I don't know if that's necessarily the right answer. Here's the reason why. I don't have a crystal ball to where I can tell you with any sort of belief or authority that it's going up tomorrow, it's going down tomorrow. I can't do that. Nobody can, and we shouldn't let anybody tell us that they can. What I think NFLX could, first of all, this thing's way overextended, right? I mean, this rally since the beginning of May, going from 313 to 434. I mean, that's over 30%. That's pretty significant. Where I think it could get interesting if it can just give us a little bit of a bull flag here. That could be good. That would give us. So instead of asking, is it going up or going down? Where's the edge at? What's the risk on getting long here, or what's the risk getting short here? And right now, I think there's no clear edge getting long or short. But I do think that if it can form a bull flag, then you can play that breakout to the upside. I think to the downside, if that doesn't materialize, I think the downside risk is that it comes back down to 372. And that probably wouldn't be a good scenario for a lot of traders. Let's see, Sam, Ryan, is it an area to jump into the rally or wait into the wait confused at this point? Yeah, I think a lot of times one of the things that we should also be asking ourselves when it says, okay, should I be getting into this rally? Should I not be? I think one of the things that would probably help more is how confident I am in this rally continuing. For me, I'm not overly confident in this rally continuing. Even though it is still continuing, I'm not so confident that I say, hey, I want to go 100% all in on this rally, or I want to go 100 into margin and say 120%. I'm not even willing to get a 50% long at this point. Instead, I want to be looking at, if the market wants to keep rallying, and I'm not trying to toe both sides of the fence here. What I'm trying to look at is, I don't know whether or not it's going to go up or go down. I can look at things as they develop and say, hey, there's more of a bearish edge, there's more of a bullish edge, and work my trades that way and work my confidence in terms of, yes, the market's way overbought. I'm not necessarily wanting to go fully capitalized at this point. I would rather be going, maybe I'm going 12% long right now. And that's what I am right now. I'm 12% long. It's not much. Now, if the market continues to rally and we can get some good trade setups, and let's say the materials breaks out or the Caterpillar can bounce tomorrow, then maybe that gives me an opportunity to add some industrial stocks, and maybe the Honeywell trade. Maybe that's the next trade that I make. So that would push me up to like 22 to 24%. And then maybe what's the other one? Maybe the real estate finally breaks out and I can add something like WY or SPG. So that's really the perspective that I would be encouraging. Thank you, Ryan. Appreciate it. And we got PBR. Let's see what PBR is all about here. Whew. I really don't know what to do on this one. I mean, it's a heck of a rally off of the May lows. You go from 10 to 14. That's a 40% rally. Would I be willing to get long at this point? No. I mean, you got to ignore this big old wick right here. I don't even know what that's about, but I don't think it really plays much into the technicals of this. I think at this stage of the game, trying to see no, I don't really have any recent drawings on it. This would, to me, would be the base, right? That's your base breakout. That's probably where it was most opportune to get long, 1246. You have a rising trend line there where it's somewhat disconnected. For me, I think unless it can form some kind of like a continuation triangle or a bull flag or maybe like a short-term bullish wedge, I don't see an edge getting long at this point. If I was already long on it, I'd be probably watching this 10-day moving average, which seems to have some support there, and be watching whether or not the trade starts to drop below that 10-day moving average before I start, looking to take some gains, or maybe I take some gains now and just go ahead and exit on a breach of that 10-day moving average or a close below it. So rising trend line off of May lows, that's probably my first one. If I was really wanting to get long on the stock, that's what I'd be looking for in terms of a bounce off of that rising trend line. If that doesn't hold, then the next level would be this 1240 level. Let's see here, MMM. This sucker's got a divvy to it. I have it in my dividend portfolio. It's not a bad stock. It definitely hasn't done much from an equity standpoint, but it does pay out a pretty good dividend. Nice run from 92 up to 102, pulled back a little bit. I think at this point, I mean, I could get confident above like 105.50 from a swing trading standpoint. That'd be it, though. Stop loss, probably too early to tell. I mean, at least, below 100 at this point. So, all right, guys and gals, really good talking with you guys. Really good being able to go live with you guys and hash through some of these charts. It's a tough market, man. I get some of the frustrations out there. As you go through each and every day, ask yourself, how confident am I in this market moving forward? Which sectors are really moving? Yes, it's tempting just to go all in on these FANG stocks, but at some point, like every stock, they do have a moment of reckoning where they do have a pullback where people are willing to start taking profits. And the people who are in the very early going, they're selling their shares, which is a lot because they've made a lot of profits, to everybody that's still willing to climb in. And we don't want to be those people. We don't want to be the people that the big money's offloading their shares to, because that's usually a bad sign. So as always, if you guys enjoyed this podcast, I would encourage you to, or not podcast. If you guys enjoyed this live stream, make sure to like and subscribe on YouTube. And, if you want some of my market research, you can click join below, or you can go to the trading block. That's $69 a month. And you get all of my trades each as I make them. So it's a really good platform there. I highly encourage everybody to join if you can. Thank you guys, and God bless.